I have some great news for everyone. So as you can see right here from the polls that we conducted, you guys want to see more Forex videos along with more smart money videos. Well, I have two cherries to put on top of that. The first of which, we're in dark theme. As you can see, you guys want to do that as well. And an even bigger cherry on top, we have Smart Money Source with us as well. So he's going to be helping me use smart money concepts within Forex to be able to make sure we get the absolute perfect entry. And we're actually going to be able to we're going to use Smart Money on Euro USD to be able to find a 65 to 1 RR trade. And let's go ahead and show you exactly how we did it.
One of the best pairs to use Smart Money on is going to be Euro USD because it has that huge high volume. It will give you those really low spreads. So we're going to be taking a look at this chart today. And also an added bonus, we have a fantastic thing just happened not so long ago for a great example using Smart Money to find a fantastic entry right at the top over here. So I'm here with Smart Money Source, as I already said. So he's going to be taking away at the beginning. He's going to be showing you basically what's happening on a higher level. Then I'll be taking over from there, going over deeper and deeper until we can refine our entry to a really good possible entry, and we'll see how well it will actually do in the end.
So basically, as I explain in my videos, the institutional order flow is the most important and yet more difficult thing to understand, because once you understand which low or which high is probably going to hold price, you can go on lower time frames and refine the entries. So if we look at this structure on the monthly chart on EURUSD, what we can soon notice is that we come from stop hunting these lows, smart money accumulating orders here, and then followed by a break or market structure. What happened next is that we have a distribution that happens inside of this structure. This distribution is happening on a premium level on a higher time frame to the left that we can see here, but doesn't matter. The thing is that after this distribution happened, you can see that we have, again, a stop hunt and a break or market structure. So when price comes back into this range, which we know is at the order block, we have to find a level where there is an imbalance that needs to be rebalanced thanks to the fair valuation of the market. As you can see here, judging only by the monthly chart, we can see we have an imbalance or void between this week and this week. So we know price is magnetized by this level. And once price gets to this level, smart money could choose, or basically banks, institutional hedge funds, they will all try to mitigate the orders that they used to push price higher here and then use to go short. So whenever price gets to this level, we can start with this candle and go into lower time frames to refine the entry. So you can continue with the explanation.
So basically, what Smart Money Source was saying, just in theory of how we can actually use this in our trading. Essentially, you want to find the high over here, and then what you do with that is you find the last candle before the engulfing candle. So the engulfing candle is this red one right here. So when we look at this green candle, we're going to place our box at this high right here. We want to capture that whole the wick to wick distance of the candle before the engulfing candle, and we want to go on smaller and smaller time frames until we can find this. So let's go ahead and use the replay feature just to help us have a really clean sheet, and we can just go ahead and zoom in on this single area here. Let's go ahead and check out the weekly time frame now. And as we can see within this whole area here, we can then find again where is the engulfing candle again. So we have a double low right here, or maybe even a triple low, and we have the engulfing candle that breaks it right here, this red one where my mouse is. So we can again do the same thing that we did on the higher time frame. We can mark up this area again, and then we're going to change the color just to help us not get as confused. I'll make it something a little more different. And then we can keep going down to smaller and smaller time frames to keep refining to be able to get the best entry possible. So if we keep scrolling down even more, we want to find something that will engulf in this area here. So essentially what we want to do is we can see that there's another area here or another void here where it hasn't been filled yet. So we want to take a look inside of the candle before that. That's going to be this red and green one here. And then we're going to look at that put it as green, and we'll go down to the 4-hour time frame now. So now we're pretty small of a time frame in comparison to how large of a time frame we started out at. So within this area here, we're able to find the last one that we want to actually look for before we can actually place our entry. So if we look right here, right where my mouse is, these two candles here, they form a void in between this low of that wick there and this wick of that green candle there. Let me go ahead and zoom in to make this a little bit bigger, so easier to see. So this one right here, we're going to change the color again. Let's make this one orange. So inside this orange box here, you can see from this wick to this wick, this is where the last void is that we absolutely must fill according to smart money theory. And within that, we want to enter our trade on the bottom of that wick, essentially. So we want to get out our, our short position tool. We're going to put our short position right at the bottom there. And basically, there is another area up here as well that we want to make sure that we can capture. So we want to make our stop loss be able to be sure to capture the last area that as well, just in case it wants to fill not only this area, but also this area as well. So we want to capture both areas for our stop loss here. And then as soon as you do that, you can go ahead and delete all of the boxes to make it a little clearer. And now we're able to see exactly how well did this actually perform. What was that a good entry? Was that stop loss good? Did it hit stop loss? The take profit is not at all important. You just put that really, really low. You find that out later. Basically, you just want to get the good entry for now. You're going to have a great RRR pretty much no matter what. Let's go ahead and see how well the trade actually performed. So here we have the same trade. I made it just a little wider so we can go on to a higher time frame now and see how well it did. So go into the daily, click this button, and we can expand this all the way over. I want to get rid of the replay feature tool first. So I'm going to go ahead and cancel the replay. And then we're going to bring this all the way over to here. And as you can see, by using that top-down analysis within the Smart Money, we're able to get a absolutely sniper entry. So you can actually do even better than this. But for now, so far, let's go ahead and see what our RR is. So just so far, we have an amazing RR of 7.5 to 1. Now, again, that can be improved even more by refining our entry, by using Wyckoff or other methods. I'm going to go ahead and let Smart Money show you guys how one strategy to refine this entry to decrease the size of our stop loss while retaining around the same entry for that, so we can get an even better RR.
Okay, here we zoomed in onto the 5-minute chart. And this is the very first time that price touched this refined level that Blake explained earlier. So let's see how we could have refined the trade in order to have a much bigger risk to reward ratio. So as you can see, we have a Wyckoff distribution schematic in this case, combined with a reversal pattern using Smart Money. We have the preliminary supply, the buying climax here. We have the automatic rally, secondary test. Then we have this Greek creating the uptrust. After this uptrust, price failed to make a higher high here. And after failing, which is potentially a shift of market structure, this shift was confirmed when price broke to the downside the previous high low. So as soon as this break of market structure happened, we confirmed that we can take a trade using this order block. So now using the same thought process that Blake used before to refine the order block, we can find that the engulfed candle that created a void is this one, leaving this void behind, and the previous candle to that one is this one right here. So we can use this candle as entry, and the stop loss ideally would be this high, but as we know, a broker tends to expand the spread, so it's usually best to add a few extra pips in order to avoid getting stopped. So we can place a stop loss around this level, and let's see how this trade was compared with the previous one in terms of risk reward ratio.
Okay, so I'm just going to copy the take profit from the other one, and then paste it in here without changing the stop loss or entry. And that'll give us an RR of 65 to 1 instead of just 7.5 to 1.
So basically, if you risked only 1% on this trade, and of course, if you held until the bottom, you have been able to make 65 RR or 65% of your own account.
Yep.